Hello and welcome, everybody. It is the final Friday fix of 2025. As usual, you join myself and the awesome guys from Alpha Picks, Alex and Jay. Again, I know I always say this, but do follow them on social media. Do definitely follow their Substacks. The stuff they put out is incredible. As usual, we'll be going over the major themes that we've seen over the week and more broader than that as well. Also, look ahead, and I guess it's the final show of the week. I'm sure Alex has got, of the year. I'm sure Alex has got some fun things to. Well, I'm hoping he has. Well, it's been a bit of a letdown. But as a normal disclaimer, this is recorded live, so apologies for any trigger warning, trigger words, swearing, etc. Nothing we say is trading or investment advice, yada yada yada. But anyway, guys, how the devil are you?
Yeah, what a time to be alive. We've made it to pretty much the last trading day of the year.
It's got to be, right? It has. This is be honest. I mean,
it's got to be.
I mean, if you were trading after the Fed, you probably need your heads looking at. But I think anyone trading on Monday, oh God, just don't.
Yeah, and I think a good example of that was yesterday with obviously US CPI and obviously the rocket ship that was triggered off the back of that, even though we'll get onto it, the data, fairly dubious. But yeah, I think that goes to show that, if you were still having meaningful positions on Thursday, the 18th of December, then yeah, you need to go out and touch grass.
Yeah, I think you're being very politically correct. Oh no, so very diplomatic in how you've said that.
Yeah. But yeah, I did want to make this a slightly more sort of year roundup / quizzy, which encompasses the main things we've seen this year. So, but before we did that, yeah, the only two things we wanted to touch on, one was obviously US CPI yesterday, which, to all intents and purposes is very dubious because of the missing data and the shutdown and like I don't.
Why are you being so diplomatic in your language?
I mean, what would you call it, Ryan?
Bollocks.
Yeah. Yeah, just absolutely mess. And to be honest, I actually think they might get away with it a little bit in terms of the agencies because it is so close to Christmas. And I think you might have some who will basically, forget about it for the next 2 weeks. But I think, if come January, we get another inflation report that's very messy and there's a lot of skepticism about how accurate it is, then I think it'll become a bigger story. But I think because of where it is in the calendar relative to Christmas, I think some people will, just sort of be like, oh, that's a bit of a mess, and then leave their desk.
Absolutely. I got to ask, I'm assuming this is Jay on the call because
I'm going to leave and come back because
I think I know what's happened, but yeah, you leave quickly.
I need to leave right now. Sorry.
I think I know what I was just saying.
He's already on the booze, isn't he?
Well,
Jay.
Clearly. But yeah, so
and then the other one, but as well as Jay, back is Bank of England yesterday. That was probably only the notable event I wanted to talk about.
Yeah.
And again, if we're talking about mess, I think, I can't remember the last time we were in a situation where we have wage growth accelerating, but unemployment rising, and like the kind of the problems that causes in terms of, do you want to cut harder to try and, help out the labor market? Or is it like actually, we think inflation is going to roll over even with this wage growth impact? And therefore, one cut next year, I think is nailed on, but it's very much a case of like when we get 3.5%, is that game over? And from my position, I think they will. I think talk about 2026 trade convictions. I think the Bank of England are going to need to cut more than is currently expected.
I completely agree with that. Sidebar on that, I'm getting really, really, really pissed off with this Labour government. Making out that consecutive cuts by the Bank of England is a sign of a strong economy and everyone's better off. I mean, it's getting ridiculous. Like the Labour Party's official Twitter account is posting like charts about how during the Tory government interest rates were ticking up and now interest rates are ticking down under Labour, trying to make the electorate, who, let's be honest, most of them don't really understand the nature of this, trying to make out that this is a good thing. When it's very clear, the reason the Bank of England are cutting rates, the reason other central banks are cutting rates is because of forecasting a deteriorating economy. And they're doing this to hopefully stimulate it, re-energize the economy, to get more money flowing. Now,
Exactly.
I'm starting to get really pissed off about this because they either don't understand. And the thing is, Andrew Bailey himself is categorically like saying the reason we're doing this is because we're worried about the economy. So for the Labour Party to be dressing this up as it's a good news story, it's criminal. It's they're either that clueless that they don't understand it, or they're just fucking lying. And it's like I've got a proper bee in my bonnet about this. So yeah, this will probably be Ryan's Q1. Me getting very rowdy about it.
Yeah, I mean, it is a bit sneaky when they try to, because I guess most people may not understand the economy.
Which is no fault of anyone.
On the surface, it seems good for the sake. Because I remember, because this isn't necessarily like a Labour specific thing, because I think Rishi Sunak used it as well with inflation coming down, but it was already trending down before he.
It's
just a very interesting thing that politicians.
But the thing is, with that, you're right. Firstly, you're right, Dave. Firstly, all politicians, they're all the same, right? Apart from the King Nigel, but yeah. Anyway, I couldn't move off. I'm joking. But the thing is, at least inflation coming down is a good news story. Yeah, okay, you can try and claim it's down to you, which is fine, but that's what politicians do. They'll claim credit for the good news. But what Labour are doing, Labour are actually publicly trying to dress up what is bad news as a good news story, and it's being deceptive. And I think that's the difference. And it's a very slippery slope when you've literally got. I could go on forever on this, but I won't.
Yeah. Let's get on to
sorry, Alex. Why are you? I just realised you're talking in very hushed tones. Are you?
Am I talking in hushed tones? Okay, no. I mean, I'm actually in New York, of all places. So I'm actually in a. Well, yeah. Not completely out and about, but I apologize. I don't think I was talking in particularly hushed tones, but I'll elevate my voice to ignore it. Okay, thank you. So basically, with these questions, right? I want you to answer, but also elaborate on the key themes from the year that stem from the question, because that's what our audience want. It's almost like a "Have I got news for you" style approach. Okay, so question number one, and neither of you know the answer to these. The best cross-asset return year to date from the following four options. So which has appreciated more in value? Option number one is NVIDIA. Option number two is gold. Option number three is Bitcoin. Or option number four is Tesla. So which do you think's generated the best return? And as a result of that, talk us through the options. What are we seeing in those assets this year?
Straight off the bat, I'm pretty sure Bitcoin is flat on the year. So
yeah,
it's the spot, right?
But this is the problem now. I'm now second guessing myself because I was like, when he said Bitcoin, I was like, there's no way. No. But now I was like, why did he put it in there? NVIDIA, maybe. Obviously, it's been the story of 2025. It really, let's be honest. AI in general, AI kind of stocks and NVIDIA. Gold, very possibly. Obviously, it's been a great year for the yellow metal. And what was the other option? Sorry, I forgot. Tesla.
Oh, Tesla's had a good week this week.
But
I'm not sure where it puts it year to date.
But that's what's getting me, Jay, because you'd have asked me this last week, I'd be, well, definitely not Tesla. And now I'm like, because he's chosen these for a reason. And he's in my head. Yeah. He's in my head.
I'm going to go, gold is still number one, kind of by hunch. And then NVIDIA, Tesla, I can't distinguish. And then Bitcoin forward.
So which one were you saying? You're saying gold. Gold number one.
Yeah,
gold top.
I think I'm going to go with Tesla. I think gold probably top. Tesla and NVIDIA is probably a lot closer than many believe, but I could be well out. Bitcoin, surely not. But again, this is a very good question, and you are massively in my head.
Yeah.
Go on.
Yeah, I mean, no, you were right. Gold. Yeah, gold led the way. Yeah, quite clearly, actually. Yeah, gold number one. NVIDIA 2, Tesla 3, Bitcoin 4. And yeah, Bitcoin is down 3.5% year to date.
Oh, is it? I thought it was still small up, but there you go. I tell you, so interestingly, fairly interesting, I think I saw a chart posted this week where the divergence between the S&P and Bitcoin, where it's the first year that there's been a significant divergence between the S&P being up X% and Bitcoin being down. I don't know what that tells us, but there you go.
Yeah, I think in when did Bitcoin kind of start struggling? Was it beginning of Q4? It's been
Q3.
end of Q4.
Yeah.
Yeah, it has been a very interesting one. How because the AI narrative has continued, but the area of the market in crypto and risk there has really like taken a completely different turn to the rest of the market.
Yeah,
Yeah.
Right.
And moving
Question.
on. Yeah. So I actually wanted to go, probably this is one of the tougher ones, but there is a really interesting theme we could talk about behind it, is which geography has generated the best stock market return this year. And so your options are the UK, so the FTSE 100, the US with the S&P, Japan with the Nikkei, or Europe and using the DAX as a proxy for Europe.
Ooh, oh, I'm going to say the Nikkei.
And they're all pretty close. They are all pretty close.
I'm going to say the Nikkei's edging it. That's my. So, well, the FTSE's not that much. Well, I suppose it's happening people here. I'll tell you one again.
Ahead of the S&P. I know that much.
But I'll tell you, talking about politicians deceiving and whatnot, again, this is something else that's been pissing me off this week. Politicians claiming that, the return on the FTSE 100, return on the FTSE 250 is a sign that the UK is doing great, UK PLC is doing great, when surely they know that the FTSE, the reason the FTSE 100 is outperforming the 250 is because 250 is domestic, the 100 is predominantly, it's only 25% of revenues into the FTSE 100 derived from the UK. So anyway, sorry, off for a bit of a tangent. Yeah, so who did you say was top, Jay?
Well, I know that the UK has outperformed the US, I believe. I think Nikkei is a good shout, but for the sake of debate, I'll go DAX. You know why I'm thinking Germany is because a lot of the
Remental.
spending early in the year.
Yeah, I'm with you on that.
Very significant case. So I'm going to go Germany, but I think it could be the Nikkei.
It's it's the fact that he singled out the DAX like the little rat he is.
Yeah,
it's just a proxy for Europe.
No, I would actually say the Eurostoxx is a proxy for Europe. But it's kind of designed to be the proxy for Europe. But usually you do you. I'm going to say I like what Jesse's done there. I'm going to say Nikkei, DAX, FTSE, S&P.
That's absolutely spot on. I mean, that's why, right? That's why you're the boss. That's why you run PIQ.
Yeah, that's why they call me the big dog.
Yeah. But I think the interesting thing from that I took from it is that, there's been so much focus on the growth in the S&P and large cap America and trending higher and higher and higher. And that's true. But again, if you look at it at a relative level, it's not actually in the best area of large cap equity performance. So I just think that's been a theme that hasn't quite been appreciated this year, that you've got other countries that have done very well.
I think it's just the case of it's just how the world acts, isn't it? It's like the S&P is seen as the benchmark, like the world stock market, basically.
Yeah.
I was expecting you to throw China in there, to be honest.
True, but I think that would have been a bit unfair. Yeah, true. Yeah. I mean, honest feedback for 2026's review is not welcome.
I'll stick on the suggestion card, yeah.
Yes, please. Yeah, we won't read them. And the one I'd say actually probably this is the hardest one, I would say, delving to a sector level now for the S&P.
Oh, God.
Because I got this completely wrong. But there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sectors that the S&P split into ETFs. Can you name me either the best or the worst performing sector in the S&P this year?
No.
No.
Can you give me some options?
Yeah, I think that's fair. Yeah, so basically, I'll give you the top 3 and the bottom 3, and you pick out which one. So the top 3 options.
Let's just do top 3 first.
Top 3 options, fine. So you've got industrials, IT, or communication services. And to help you a bit more, because communication services sounds very vague, so it does include obviously Verizon, AT&T, things like that, but it also includes the likes of Microsoft and Alphabet.
So that I'm a bit disappointed that you've elaborated on that, because I'm not boasting obviously, but I knew that, and I was hoping that Jesse didn't.
Oh, okay, yeah, there you go.
I'm going to say communications top.
Okay.
We go communications and then industrials. What the other one was
And then IT.
IT.
Oh no, well, do you not? Because IT, would that include like data center kind of providers and?
Yes.
Oh, I'm gonna go IT. I changed mine. IT. Well, no pressure.
For rather than giving the same answer, I'll go.
No. Don't do it. Because then if I'm right and you're wrong, you'll just use that as an excuse. You do what you think is right.
Yeah, I would go.
Communication. Oh, go on. Drum roll.
Okay. Yeah, communication.
Oh, you.
Communication 1, IT 2.
Ah, fuck.
Yeah.
Fact 1-0. It's 1-0.
It's 1-0.
Like,
Bottom three now.
bottom three.
This is a toss up. Okay. You've got real estate, you've got energy, or you've got consumer staples. And there's valid reasons why you might pick any of those three, to be honest.
I think energy is a bit of a dark horse because even though the energy commodities have been coming off, I think there's been a little bit of strength in them. I might be wrong here. I might be making out that I'm proving that I'm a bit of a dick. I'm going to go real estate for bottom.
Okay. Jay, what are you saying?
Yeah, I would have gone energy as the best performing out of the three.
That's not the question.
Yes, come on, Jay. You don't make the questions, I do.
But as far as what takes the bottom spot, I would say energy or.
You got to choose one, mate. Come on.
I'm trying to remember what the third
He's
option
giving
was.
us multiple choice to make it easy.
There's real estate, energy, or consumer staples.
Consumer statement, that was the one I was forgetting. I'd go real estate as one.
All right, go on.
Okay. Yeah, real estate.
Yeah.
Real estate brand. Yeah.
Love it.
The only negative performing sector year to date. Real estate.
And you know
S&P.
what? I think there's more downside to come in that because I think we're slowly seeing more, especially commercial real estate, more and more is being priced to market as mark to market. Sorry, and I think we've only just seen the beginning of that because we're seeing some absolute horror stories of kind of these huge blocks in the US, office blocks and whatnot are like kind of coming in at like 75% discounts to when they were bought 10 years ago. So I think there's potentially a lot more to be marked to market on that.
Okay, a little 2026 conviction call.
Yeah, we'll see
on that one then. Yeah. And then I wanted to a couple of just little thematic ones. So one was that this year we've seen obviously the US dollar lose its sort of structural bid. It struggled. I mean, people say it started to struggle from obviously.
Oh, have we lost him?
Potentially.
Sorry. Someone tried to call me an injured thing. Yeah, so obviously people said that the dollar decline started in April, but it didn't actually. It started pretty much in February. And since then it is, obviously struggled significantly. So the interesting one I wanted to say is, so let's say you got to January the 1st and you were like, yeah, do you know what? I think the dollar is going to underperform this year. And you could buy any G10 currency. Which one would have generated you the best return out of euro, sterling, Swiss franc, or Swedish krona?
Oh, just because it's the outsider, because it's the exotic one, I'm going to say krona. But I'll caveat with saying I was going to go pound before you said krona.
Yeah, I do like the outside bet. I'll go sterling today. Yeah.
Drum roll.
I mean, you're right, Ryan. It's the Swedish krona, which it was put out there. And it's an interesting one. So the Swedish krona is up 20% against the US dollar this year. Ooh. And talking about themes, it's definitely snuck under the radar.
Yeah,
essentially.
The reasons behind that, because I'm struggling to remember I'm struggling to remember even seeing the krona mentioned on anyone's kind of post or anything like that.
Yeah. So, basically one factor was that it had a terrible year last year, 2024. So it was essentially undervalued coming into this year. And then you've also had the sort of like monetary policy shift from the Riksbank over there, where, they've essentially pivoted from being significantly dovish to actually arguably middle of the ground, neutral in terms of their role. Right. And then you've also got that side of factor that, like NOK and SEK, they are higher beta currencies in the G10 space. So it's like when you do see a depreciation of the dollar, typically that's one where you're going to get a bit more juice versus like a sterling or a euro.
Right, yeah.
But even with that, I mean, like, yeah, you talk about sterling. Sterling dollar's up 8% just over year to date, even with all of the problems in the UK.
Yeah.
Which even the yen is actually marginally up against the dollar this year. So I think it kind of shows just how much the dollar has weakened.
Yeah, but this is it, and I'm posing a question to you now. Obviously, because with the budget and the way that UK economy is going, I'm pleasantly surprised that sterling's doing as well as it is, or cable's doing as well as it is. Do you think that's purely a dollar weakness story, or because I'm genuinely shocked how well cable's doing?
Yeah.
But is it kind of just purely because the dollar is doing so badly, or is there any reason why there is some strength in the sterling? I don't know. It's an odd one.
Yeah, I mean, I think if you looked at over this year, I mean, remember, like back in June, July, it was trading at like 137, 136. So, I mean, we have even been higher than where we are currently. But I think we're seeing what we're seeing now is more of I mean, certainly from post Bank of England yesterday, obviously sterling benefited from that on rate expectations. But I think when you look at it forward from here, I struggle to see. I mean, the dollar has had a bad year. It's depreciated. I think looking ahead, I don't see the same kind of dollar depreciation the next year, which should mean that sterling dollar next year will be based more on the sterling leg than the dollar leg.
Thinking about it.
And I think in terms of drivers, as we said right at the outset, like if we do see the pricing for the Bank of England move lower, i.e. pricing more cuts, which I think will need to happen, I think that hits a big pillar of support out from under sterling.
But I guess the flip side, on the other side of the equation is, we still don't know who the next Fed chair is going to be, and we don't know how aggressive they're going to be to appease Trump. So I guess you have got that. It's going to be an interesting year for that pair.
Yeah, it is. Yeah, for sure. And the other thing I think we shouldn't forget is that we have become a little bit accustomed to volatile rides on something like a sterling dollar.
Yeah.
And in that, there's nothing to rule out that we actually stay pretty range bound between like a, 130, 137, something like that for the next year. Like that's also very plausible.
I'll tell you what, speaking of volatility, I think I saw our good friend Michael Brown post today. Euro sterling is like volatility's hit like 2.something% this week or something like that.
I missed that, but yeah,
that thing
doesn't surprise me.
If you my good friend Polemic Payne on Twitter is a very, very smart cookie. Everyone should definitely follow him. He's always a big fan of zooming out on the Euro sterling chart because basically it's done absolutely fuck all in about 10 years.
Yes. Yeah. Euro sterling and Euro Swiss, like those two pairs. Yeah.
But if you are trading that, well, tell us why.
Yeah. Tell us how much leverage you're using.
Yeah, right.
That's what it is. And then two more. One I thought was very interesting because we've talked about obviously rate expectation for UK, but we have seen big shifts over the course this year in US monetary policy expectations. So based on the SOFR futures contract for December, what was the most and the least amount of cuts priced in over the course of this year at different points?
Ooh.
It's a big old range.
Oh, go on, Jay first.
I want to say we have probably swung between like 1 and 5 cuts. I feel like at some point we're pricing more than like 1.25.
I'm going to go 0.5 cuts and 5.5 cuts. I think the range has been bigger than I think Jay is pretty much there, but I just feel like it might be a little bit bigger, and I want the outside.
Yeah. I mean, you are macro technicians, both of you. So yeah, it's gone.
Whoa.
It went from 1 cut to 5.5 cuts. Yeah.
So
obviously back in April was obviously when it swung out massively to 5.5, which is pretty mind-boggling when you think about it. That was 4 months into the year with whatever 6 meetings left, and they had 5.5 cuts priced in. And then and then at various points this year it fell down to 1 cut. So
I was half right.
Yeah, you were half right on one leg and half right on the other.
Bye.
Yeah. And then I mean, where are we at on the points? I mean,
I think
I've
this
got
call it, this call it, this is a tiebreaker. This is
okay. This is the final one. This is a tiebreaker question. So last one, big theme, AI infrastructure spending.
Ooh.
So to the nearest, what we go to the nearest 10 billion, how much AI infrastructure spend are we expecting to end this year on? And how much is being forecast for 2026? It's the nearest. Actually, no, let's go to the nearest 50
I was
billion.
going to say, I'm not sure I could do nearest 100. And you're after the nearest 10. Sorry, so first, what was the first part of the question? Let's focus on that first part. So this
this year, how much is going to be spent on AI infrastructure spend?
Jay can go.
I'm happy to go first. I'm going to say
I'll go first next time.
350.
So just to clarify, this is what's been spent or deals that have been announced.
Yeah, and no, what has actually been spent this year? Yeah,
and you went 350.
Yeah,
I'm going to go 351.
You're taking the higher.
As Ryan's point, it's 400.
400.
400.
All right, John, I'll go first this time. So right, I'm 1-0 up in the tiebreaker.
Yeah. So how much for next year?
I'm going to go. Oh, damn it. 850.
Ooh. Okay, that's punchy.
Oh, don't tell me that. He's going to take the under now. What? This is a.
Oh, yeah, sorry.
Yeah. Right up.
Yeah, sorry.
God damn it.
I wasn't going to take the over, but I will take the edge I have now.
Yeah. All of a sudden, Jay's going 849.
Yeah, brilliant.
Yeah.
849.
849. It's 500.
Yeah,
is currently anticipated.
Right up.
Yeah, sorry. Yeah, I did do that. But no, I tell you what. I've got a little ancillary question that can be the tiebreaker. So 500 billion forecast next year between just Microsoft, Amazon, Google, and Meta.
Yep.
How much of those four companies contributing to that 500 billion alone?
So what were the companies again?
Microsoft, Amazon, Alphabet, and Meta.
I don't mind going first. I'll go first, mate. I'll go first. Okay, go. No, actually, no, because I got stitched up. You go first.
Well, I was just going to say, I know Oracle are a big contributor to that, like, expected spend next year, and they're not in Alex's list.
Yeah, that's what threw me.
Yeah, which kind of throws a spanner in there. I'm going to go 70% between the four companies.
Yeah, see, it's the Oracle bit that's thrown me. I'm going to go 69.
Of course you will.
It is. I've actually got the dollar notion. So it's 280. So 56%.
Yeah,
56%.
He's won it. Oh,
he's on me then in the new year.
Well, exactly that. Yeah. Well, I think we owe Alex beers anyway, or lunch even.
The S&P never did quite get 10,000, did it, right?
Oh man, we do owe you.
Yeah. Wonderful. Well, yeah, I mean, I think that pretty much puts our time. But I think, those main themes, I think, from another wacko year in markets. I think, as speak for Jay, it's been a pleasure. Ryan, swashbuckling with you on Fridays, trying to navigate our way around the main stories and events. And I think there's lots to look forward to next year for us all together.
We need to do in the past about doing potentially get some London drinks in as well and get some people out as well. So I think there's lots more we can be doing together. But I know I echo exactly what you said. Absolute pleasure talking to you guys weekly. You know how much love I got for you guys. And I think just wishing our listeners a very, very Merry Christmas. We hope you've had a good year. We hope you have an exceptional new year and holidays. And let's all get ready to attack 2026.
Exactly. Love it.